Hey there everyone, Ryan Beesmer here with the Rawls Group. I wanted to take a minute today to talk about something that has been on a lot of people's minds, especially the last couple of days, last couple of weeks, and that's market volatility. You know, if you've been watching the headlines, you've seen the swings, stocks are up one day, down the next day, bond yields are jumping around, not reacting the ways that we would typically expect them to. Analysts are debating about recession risks. It's enough to make even seasoned investors feel like, what am I supposed to be doing right now? Here's the truth. Volatility is not new. It's part of the market. What matters isn't the noise of the moment. It's whether you have a plan that was built with those moments in mind. Okay? Markets respond to a lot of things. Interest rates, inflation data, global events, earnings reports, truth social posts. And right now we're seeing a mix of all of those factors. Central banks are still fighting with inflation, growth is slowing in some sectors, and uncertainty is high. That's why we're seeing pressure in both the equity and bond markets. Now, for business owners, this environment adds an entirely new layer of concern. Not only are you thinking about the investments you've made, you're thinking about your employees, your cash flow, and your long-term goals. And in times like these, it's very tempting to want to make a quick move and react, pull back, maybe go to cash, delay a decision. Here's the problem with that. Emotional decisions often lead to poor outcomes. We've seen this time and time again. People get nervous, they sell low, they miss the rebound. The key isn't trying to predict what happens next week or next month. It's having a strategy that's built for the long term and sticking to it. One of the powerful tools that we use here at the Rawls Group with our clients to stay on track is an investment policy statement, or an IPS. An IPS outlines your goals, risk tolerance, time horizon, and the rules for how your portfolio should be managed. It's not just for large institutions. Individuals and business owners can benefit from having this framework in place. It turns emotional reactions into thoughtful decisions because you've already defined how you want to respond when things get bumpy. That means understanding your risk tolerance, setting clear goals, diversifying your portfolio, and building in flexibility so that you are not forced to react under pressure. It also means aligning your business planning and your personal financial planning, two very key aspects of what the Rawls Group focuses on with our clients, because for business owners, these two things are deeply connected. If you don't have a plan in place, or you are unsure whether your current plan is strong enough to weather this environment, it's time to talk. Our firm works with business owners just like you to help you gain clarity, reduce risk, and move forward with confidence. This isn't about timing the market, it's about building a foundation that can stand up to whatever the market throws your way. If you're feeling uncertain, let's have a conversation. We'll help you take a step back, look at the bigger picture, create a strategy that makes sense where you are and where you want to go. Thanks for watching, and remember, volatility is temporary, good planning is permanent.